This is going to be a massive warning for Monday's open. I want to go ahead and go over a preparation plan for you because, as you can see, the market has taken quite a hit this week, last week. Of course, this week we were down 3% one of the days. Nvidia took a big hit from the Trump tariffs. Could this be the next leg down to new all-time lows for the year? Well, let's go ahead and jump into it. I want to talk about two specific stocks as well, and massive news and potentially some opportunity around them. So let's go ahead and dive into it, all right? Portfolio sitting at 735K. This is just one of the portfolios. If you're new here, I plan on turning this into $10 million. Now, let's take a look at the markets, all right? As you can see, QQQ here, the NASDAQ 100, we had a pretty strong candle this week, okay? I'm looking at the weekly chart. So every single candle here represents 1 week. Now, what we're seeing right here is actually some bullish structure forming, okay? This is a higher low that was made. Obviously, lower lows, lower low, the lowest right here, right? We hit 402 on QQQ, and then we have a higher low close this week. So this is actually a good sign for the bulls, all right? Now, we're gonna go over two more indicators that kind of help me determine if we hit a short-term bottom here in the markets, all right? Number one is the VIX, all right? This is the fear and volatility index of the S&P 500. I've been talking about this ever since I started my channel. This is the number one thing I look at, especially when trading options, okay? So obviously, when the VIX is high, the options premiums are higher, which is a good opportunity for option sellers like me and you to make a lot of money, right? Taking advantage of fear. Be greedy when others are fearful, and fearful when others are greedy. A quote from one of my favorite investors, Warren Buffett, okay? So as you can see, the VIX hit 60 last week. This week it hit a high of 35, and it does seem to be retracting from here, okay? So what we wanna see next week, potentially we'll see a deal come through with the US and China. That would be the biggest piece of news that would basically would send the VIX back down, maybe even sub 20, okay? So we could see this potentially happen next week if we get some sort of deal with China, okay? If that happens within the next week or in the next 2 weeks, which I imagine is probably not gonna happen next week, but maybe the week after. And when that happens, you are going to see fear dissipate from the markets, and you're going to see QQQ rally back up, okay? Now, what we want to see next week is potential, like if that news or the deal hasn't been made with China, but with a lot of other countries, what you want to see is the weekly candle on QQQ finish somewhere above this 466 level. So somewhere in here, right? It doesn't have to go straight up. We don't have to go, straight V-shaped recovery from here. But what we want to see is some sort of strength, trending back in the markets, okay? That's what we want to see. So that's what I'm playing for, okay? And there's two specific stocks that are going to yield massive returns. They're going to make multimillionaires within the next month or two. And I want to show you those stocks because I'm playing them, okay? The last indicator I do want to look at, not only VIX, okay? And I like to look at the daily chart. We'll flip back to it. But what I do want to show you is the S5FI index. So this right here shows the S&P 500 stocks above their 50-day moving average. Now, the lows that we hit on this, okay, like back, not this week, but last week, we hit basically a new low for the year where only 4% of stocks were above their 50-day moving average, okay? We haven't seen those levels since the bear market of 2022, as you can see back here, and the COVID crash of 2020. All right, now we are recovering from that, but the market breadth or the market structure is still very weak, right? So this is an opportune time for contrarian investors or some people who want to basically buy dips or get a discount on stocks. This is the best time to do it, okay? So that's how I'm playing it. I'm playing long, and basically I combine this, the S5FI, with the VIX, okay? And we can go back to the VIX. And that's how I know when to start scaling up my trades here in the markets, okay? So right now, being heavily invested is going to pay many benefits once the market starts to recover. We're already starting to recover, but obviously once some deals are on the table with the tariffs, that's when we'll see a massive recovery and a massive crash with the VIX, okay? So fear is starting to dissipate. Obviously, it's been on a nice downtrend, as you can see from here, okay? But we want to see it. We want to see it go further down, all right? So let's go ahead and look at the one potential indicator that can really make these markets go a lot higher. And that's we're looking at right now is called the CME Fed Watch tool. This basically is a tool that prices in Federal Reserve interest rates cuts, okay? And this is a very accurate indicator. So right now for this year, okay, there's going to be a cut in June, okay, as we could see priced in here, one in July and one in October, okay? So there are 3 rate cuts being priced in. In fact, a 4th one being priced in January of 2026. So with rate cuts coming in, right, more liquidity coming into the markets, cheaper money, businesses can borrow at cheaper rates, consumers can borrow at cheaper rates. That's going to push the stock market much higher, okay? That's good for corporate earnings. That is good for the stock market going up. When the interest rates go up, that is bad for stocks, right? Like we saw in 2022. That's what literally caused the bear market. The Fed had to raise interest rates because inflation was rampant and the market tanked, right? But what we're seeing is interest rate cuts being priced in. So I take a look at this on a weekly basis. I would definitely do that if I were you. You could go to cmegroup.com and look at the Fed Watch tool and just make sure that on the macroeconomic perspective that interest rate cuts are being priced in. So that is very, very good. Now, with that being said, we're already at negative 17% on QQQ on the NASDAQ 100. Now, the 2 stocks that we're getting into are at massive discounts and they have a lot of bullish sentiment behind them going into earnings, and I want to jump into that. But before we do, if you do want to make multiple 6 figures trading options and you want mentorship directly from me in my group of 60 investors, go ahead and click that first link down below in the description. That'll be there. Also, if you want my free trade ideas, I do give them away on Instagram. I message everyone on Instagram as well if you want to ask me questions there. And my free newsletter, which are both in the links down below in the description. Okay, so let's go ahead and jump into it. The very first stock is SoFi Technologies. Okay, this stock has been very beaten up. They had amazing earnings last quarter, and that's basically what attracted me to get into this stock. So I'm a newer investor into SoFi Technologies. Now, if you look back, current PE ratio 27, which is right in line with the S&P 500. So they're very, very good as far as a growth company that has a low PE ratio. They earn a lot of money, right? And if you look at their net margins for last quarter, 32.99%. So the margins on this company are absolutely phenomenal, especially being in the sector of lending, right? They do refinancing of student loans, they do refinancing of mortgages, and all types of lending. So I really love this platform. Online banking sector, high growth. They utilize AI technology, and their CEO, Anthony Noto, he's all about growth, okay? So SoFi is an amazing company, great earnings last quarter, but what they recently did today, okay? This news came out. SoFi secured $3.2 billion expansion to their loan platform business across agreements with Fortress and Edge Focus. So they're basically expanding their loan platform, more funds to lend out, meaning more interest that they'll be able to accrue on those funds. So that is massive. That's massive for SoFi. Brand new piece of news. And this is coming in prior to their earnings, which are on April 29th. So if you wanted to play SoFi, this would be a good place to do it, right? They're already at a massive discount. The trend on the stock, if we go back, go back to 2023, this is what we want to see. We want to see stocks trending upwards, and that's what we're seeing, okay? So, they're at a massive discount. Let's go ahead and calculate the discount that they're at, actually. From the top, from all-time highs, this stock is down 40%, okay? So they have a lot of room to run, especially on positive earnings. So how I would play it is I would actually go, and we'll go to my positions, okay? As you can see, SoFi currently trading at 11 bucks. I have many cash secured puts at 12.5, 12 bucks. So they're in the money. I might get assigned on these, which is great. Getting still a massive discount from all-time highs, right? And then I have 1,800 shares that I got assigned at $12.33, okay? And then I have some covered calls at 14 and 12 to get those called away. Now, how I would play this, okay? If you want to be safe, cash secured puts are going to be the best route. Okay, so I would go, if you want to go to earnings week, 15 days out, you're going to collect a lot because the implied volatility is 114% on those. So I would actually play these for earnings, and I would just go super safe. You can go to the 22 delta, which is 9.5. All right, so you'd basically be able to get down to these levels. 9.5 would be all the way down here. Okay, it's a very far. If we calculate how far down below where it's currently trading, that would be a massive 11.68% discount if you got assigned at that price. Okay, so that's a great kind of starting point. We could sell the 9.5 puts. Let's calculate the return on those. All right, so we're gonna collect $35 divided by 9.5. So you'd need about $950 per contract. So let's do that again, 35 divided by 9.5. That would be about a 3.6% return in 15 days, okay? In 15 days. So on a monthly basis, that would be, over 7%, right? So that's an amazing return and a very, very safe trade. So if you want to just do that, that would be the safest way. That's what I personally, am doing. I'm selling a lot of puts on this stock. Now, what I am debating on is actually getting into some LEAPS call options. So if you want to leverage up your money, right, and get 3x returns or, control about 3 times more than what you're paying, you would go out to June 18th, which is 427 days out, okay? And you'd buy the 70 delta call option, which is the 10 strike, okay, 71 delta. You pay $370. So, I may get into these on Monday, depending on where SoFi is trading, to play this for earnings, as I do believe SoFi is at a massive discount. And I think that they're, them securing that $3.2 billion expansion of loans is massive. I think that's going to play to their benefit. So I do see potentially during an earnings spike, potentially up to this $14 level. All right, so that's kind of what I'm playing for, and that's how I would play those. So you pay $370 versus paying $1,100 for 100 shares. So you'd get a lot of leverage on your money there, and pretty good risk to reward considering that you go out 427 days, and these are only decaying about 36 cents per day. So very little time decay on those. So that's how I'd play the LEAPS there. I think SoFi is a massive opportunity for long-term growth for the portfolio. Now, let's go ahead and jump into the second stock that I want to talk about, which is the beloved Palantir. Okay, again, another partnership. Obviously, Palantir has already partnered with Anthropic, but they allowed Anthropic, to basically deploy their own application through Palantir's FedStart software. Okay, so what's cool about Palantir is now they're allowing other companies to basically launch their applications on Palantir software, in the federal government, who knows, maybe in the military and with other commercial businesses. So they are building a platform where other companies can build within their platform. So this is massive. This is a massive opportunity that Palantir has secured. Obviously, the previous piece of news was they partnered with NATO, to deploy their Maven software. So that's massive, Many partnerships that Palantir just keeps accruing prior to earnings. And their earnings, we could check their earnings real quick. We're gonna go to Palantir. And their earnings are coming up on May 5th. So right now is the perfect time to kind of establish your positions. Palantir is trading at a discount comparatively to where they were. And I believe their earnings are going to be stellar. So if we go to Palantir and we take a look at the charts, this has been one of the strongest stocks during this crash. It's kind of just been trading in this sideways range for quite a while versus other stocks like Google has just been absolutely obliterated. Amazon just absolutely obliterated, right? Palantir kind of took that hit right off the bat, coming down from 125 all the way down here real quick, but then just kind of trading within this range. So right now we're kind of seeing a bullish trend, a bullish trend on Palantir. And this thing could really be coiling up for an explosion, maybe to 108. That's kind of my prediction, is that it's going to go to 108. But the market makers are pricing in a bigger move on Palantir. So let's take a look at Palantir and how we would play it. So as you can see, I have right here, 5, 6, 7, 8 call options, LEAPS options. These expire very far out, 427 days on these, 337 days on these. I'm already up 6%, but I'm gonna ride these probably until, 105 to 108, potentially even higher, okay? And this is something that I give in my group, in my Options Trading University Mastermind. I let my clients know when I get in and when I get out so they could participate with me. And we've been profiting a lot on LEAPS. So how I would play this, okay? We're gonna go to the options chain and we're just gonna see like what the market makers are pricing in. On May 9th in 22 days, they are pricing in an 18-point move, 18 plus or minus, okay? So from here, this thing could get up to, $112. That's kind of what they're pricing in. That's the expected move. Now, obviously, that goes the same for the downside. On horrible earnings, this thing could go down potentially 18 points. So you do want to keep that in mind, but obviously I'm leaning way more bullish on this stock than bearish. This stock has already been beat up during this crash, and we saw a low of 66, which I don't think we will ever see again in the history of Palantir stock, okay? I don't think we'll ever see this price again. So right now is a great place to kind of deploy positions because we're not at all-time highs, right? But we're also at a decent discount here. So let's kind of look at what I would do. So if you did want to take advantage of that volatility, again, you could go 22 days out and you could be very safe and sell, I have the 79s, which is a 20 delta cash secured put. That's extremely safe. You don't have to go that safe, but you could go 25 delta, which is the 83 strike, and let's calculate the return there. All right, so 345 divided by 83. And in 22 days, you're gonna make a 4.15% return, okay? Annualized, let's just annualize that just to give you perspective. That's a 49, basically a 50% return in a year. You're beating the market by 5x, okay? For selling safe cash secured puts that, hey, if you got assigned at 83, you're getting a massive discount on the stock. 83 is, all the way down here, okay? So very far away. And if you want to calculate how far down from the current price, that's about a 11% discount from here, okay? So a very good risk to reward there. Obviously, I'm playing this for the upside and, great return on the cash secured puts in 22 days. All right, now, how would I play this with the LEAPS? Well, I'm going to show you exactly what I did, okay? And if you got in on Monday, potentially if we're not up at 97 bucks, but if we're trading around the same prices now, you could literally get the same price as me, okay? I'm down 172 bucks on these. So what I would do is I'd go out to June 18th, 2026, 427 days, and I would go to the 70 delta, which is at 87.5. I like the 85 strike. It's just more even, right? As far as like there's a little bit more volume there. So yeah, 85 strike, you're gonna pay 3,100 bucks to control 100 shares as opposed to paying 9,400. So I like that leverage on your money. And these, if Palantir or when Palantir goes up to 105, 108, you're probably gonna be up 40 to 60% on those call options. So I do like these, and it gives you ample amount of room to be right, just in case worst case scenario, Palantir goes down, right? You have over 400 days for Palantir to come back, to at least break even, which would be 30 bucks above this particular strike price, which would be somewhere around 115, okay? By expiration in 427 days. So I like that move, and that is going to be my two stocks going into Monday's open. I do believe the market is going to go higher. We've digested a lot of bad news, and the market really didn't do much except for went down 3% this week during one of the days. But other than that NVIDIA news, the market is held pretty stable here, and I think that any piece of good news will send this market much higher in a short amount of time. So I hope you enjoyed this video. If you enjoyed it, please hit the thumbs up, and I'll see you in the next one. I'm gonna link another video that you can watch right here. Check this one out, and take care. Have a happy Easter. Have a great weekend.